Classical Conversation Studios presents Refining Rhetoric with CEO Robert Bortins, a podcast where faith, business, politics, and classical education meet. Join us as we use the classical tools of rhetoric to seek truth in every arena of life.
Hey everyone, welcome back to another exciting episode of Refining Rhetoric. And today we're talking about current events, and I want to reflect on where we are in the Bitcoin cycle. What is Bitcoin? Trying to get all of you up to speed if you haven't been paying attention to our Bitcoin and crypto segment, and just tell you, where we are now, what it would have looked like if you had been DCAing in. That's short for dollar cost averaging, and try to get you maybe in front of this still to talk about, is it too late to really get into investing in Bitcoin if it's something that I haven't done yet? Again, this is all personal opinions, not financial advice. Your goals are not my goals, but we do see that inflation is getting really high again, that we are continuing to see the value of the dollar drop, and really the fiat dollars in the U.S. just continuing to become more and more weaponized against its citizens. And so Bitcoin was started really, 12 years ago, approximately, to combat some of these things that are inherently wrong with the fiat monetary policy. So if you follow me on Facebook, trust me, I'm an engineer. You can see I posted a Bitcoin primer. We're recording this on February 28th, so things could change in the next week, but you're going to really try to look at information for you that is going to be relevant no matter what the price of Bitcoin is when you listen to this episode. We will be streaming this on YouTube, which will probably be a great place to watch since we will be looking at graphs. But if you are just listening to this podcast, we'll make sure and describe the information you're seeing on the screen well enough that you can enjoy and get out of it from just listening to the podcast as well. But I would really encourage you to go to our YouTube page and check it out because you can see exactly what we're talking about live. And so we'll make a link in the podcast notes for you to go check that out and check out these different things we're looking at. So the first thing is, what is Bitcoin? Bitcoin is an immutable digital property. There will only be 21 million ever created. There are 19 million that have been created so far. So there will be another 2 million that will be released over the next 120 years. So 19 million over the first approximately 12 years, and then 2 million over the next 120. You do not have to buy a full Bitcoin. You can buy a partial Bitcoin called Sats, and that is short for Satoshi. He is one of the people that is credited with founding Bitcoin. And one of the mythical elements of Bitcoin is he's basically never been heard from again, presumed dead by many people. So that's the basics of Bitcoin. And then also what you need to know is that the Bitcoin has a halving cycle. So every 10 minutes, new Bitcoin is released. That's how we've gotten to 19 million and how we have 2 million left. But every 4 years, the amount of Bitcoin released every 10 minutes is cut in half. And so we have like 6.25 that are released every 10 minutes now, or 900 per day. And starting in early April, sometime between like April 9th and 19th, that's going to get cut in half to 3.125 per day, or 3.125 every 10 minutes, or 450 total over the course of the day. And so you got to think that the demand for Bitcoin is increasing while the amount of Bitcoin being created on a regular basis is decreasing. So we've got a very, what we call a squeeze on liquidity, or squeeze on the amount of Bitcoin available for purchase. So,
all right, Robert, can I cut you off here because I need to back up and ask some clarifying questions? So
sure.
You keep talking about mining Bitcoin and creating Bitcoin, and this is something I was asked by my father the other day at dinner. What is being physically created It's an imaginary thing. It's in the internet. What is it? What's being mined?
Yeah, so it's basically it's a mathematical code that releases digital property. Some people call it digital gold, and it's basically a block or a way of tracking the ledger. And so the more that Bitcoin are created, the safer and sturdier the ledger. And it's a way of really capturing data. So it's triple entry accounting and a way of recording those entries onto the blockchain. And so there's nothing physical. It's very digital, but all of our money is now digital, right? If you go to a bank, they don't have your money sitting in the bank account in some vault. It's all digital on computers nowadays. And so it's just, instead of having double entry accounting, a triple entry accounting, and each Bitcoin is a way of capturing the activity on the ledger. And so you can buy and sell it. And of course, you can mine it. As the miners are securing the network by solving these mathematical equations. And there's just what's called hash power. Just all these miners are trying to solve these mathematical equations to earn the Bitcoin. So
So
it's a little bit, it's kind of hard to describe, but
yeah,
it's
that's the, I think, kind of the answer I gave to my dad. So I told him, I was like, first of all, you need to let go of this idea that Bitcoin's not a real and tangible thing. I think the last report I saw was 2.3% of all energy used in the United States was attributed to crypto mining. And so you have actual physical energy and commodities being spent to extract Bitcoin out of the network. So at that point, you can't say this is just nothing. People are putting energy and effort into acquiring this thing, so you have to ask why. And that's where you're getting into what you're talking about, where the hashes are making the network more secure, because the more people that are mining crypto, that mining is actually what's validating the transactions on the network and making sure that your transaction is safe, that no one can go in and meddle with it, no one can tamper with it. It is peer to peer, and we know who it goes to and who it's from, and it can't be messed with.
Yeah, absolutely. So it's really a way of turning energy into money. So one of the things that I know people are excited about here on February 28th in the morning, because who knows what it's going to be tonight, but it's basically at $61,000 and some change. One of my favorite places to go to look at the crypto is coinmarketcap.com. And you could click on Bitcoin and then click on all. And we're looking at a chart where it shows you from the start of time, or start of 2012, when we had our first real run up to today. And so you can see that today right now it's at 61,800, just short of that. And the previous cycle's high was around 69,000 in December of 2021. And previous to that, the high was, in 2018, and a high in 2014 in the November, December timeframe. And, what you see is these 4-year cycles. And typically, if you think about 2017 and 2021, the next high, it would be projected to be kind of around November of 2025, if the historical patterns hold. And of course, each 4-year cycle is a little bit different, and it's driven by this halving. So is it too late to get in? It's already $61,000 as of today. Could be 70,000. Could be at a new all-time high when you're listening right now, and the 100% of people who've ever invested in crypto would be in the money. Or maybe it's dropped back down to 38,000. And those of us who've been investing in the space for a long time are probably getting mortgages out and maxing out our credit cards to buy as much as we can, because we just believe in these 4-year cycles and the idea behind Bitcoin so much, and believe that it will in fact take off and complete another 4-year cycle. So the best time to buy would have been, kind of January of 2023, January 4 years earlier in 19, January 4 years earlier than that in 2015, and January 4 years earlier than that in 2011 when it was created. So really, am I late to the party? I think you're still early, but of course, it would have been better to buy earlier, but it's never a bad time to start. So be wary, and that's why we love to talk about DCA, or dollar cost averaging. But let's go back to my Facebook post. I want to finish going through what we talked about there. So one of the questions people ask, well, doesn't Bitcoin drop like 80%? And then it probably will again. I will say that the volatility seems to be decreasing as there's more liquidity in the market. It's been around longer, and the amount of Bitcoin being generated on a daily basis is decreasing. So all those reasons why maybe it just dropped 60% from the all-time high. There's people that are speculating that we'll never see a $40,000 Bitcoin again. You might be laughing because it's $38,000 when you're listening to this, and in which case I'm probably trying to figure out how to buy some more. But my goals aren't necessarily your goals. I have a video on DCAing by a guy that I like to watch. His name's Rob also, but it's called Dan on Crypto. That we'll link below. We're not going to watch that today, but he talks about dollar cost averaging as well. And so with this 4-year cycle, there is a current fair market value that's looking at the energy, the amount of Bitcoin that are in there, and different factors. And so the current fair market value of Bitcoin is approximately $52,000. Of course, right now we're about $8,000 ahead of that, or $9,000 ahead of that, and we're only about $7,000 from the all-time high. But that will increase to $110,000 as soon as the halving occurs. So on April 9th to 19th, whenever that occurs, the current fair market value will jump to $110,000 over the next month or so. In 2028, we're looking at a $220,000 fair market value, and in 2032, a $440,000 fair market value, as long as inflation and the dollar doesn't erode too much between now and then. And so you've got these boom and bust cycles in Bitcoin. And I would just tell people, like, one of the things that I've started thinking about is, instead of looking at the Bitcoin all-time highs, go back a year or 2 years from those all-time highs when we see all-time lows for each of those cycles. And instead of looking at these cycle tops, try to invest based on these cycle lows. And so we saw like a low of $3,000 2 cycles ago, $9,000 this last cycle, and $16,000. So you can see that that's kind of continuing to increase. And I'm just using approximate numbers, but you can actually go into the charts and see exactly for yourself. One of the things, too, that people are talking about is just the unaffordability of housing right now, and how people, housing is one of the ways that people store wealth in America because it's physical property. It tends to go up and to the right, although we do have some boom and bust cycles. But in general, it's been a way that Americans have really saved money. Well, property is getting so expensive, Gen Z and even some of the younger millennials can't even buy houses anymore. And of course, a lot of people aren't selling because interest rates are so high. So it's causing a squeeze in the marketplace, which is keeping the prices high. Well, the thing about Bitcoin is the price of a house versus Bitcoin every 4 years is going down. And so you can go back and do some of that historical math. But, some of the things I've seen is, when Bitcoin was first released, it might cost 2,000 Bitcoin to buy a house. Well, then the next cycle it was 100 Bitcoin to buy a house. And the next cycle was 20 Bitcoin to buy the average house. And then this cycle is going to be 2 Bitcoin to buy the average house. So housing compared to Bitcoin has been going down. But again, you get these kind of boom and bust cycles. And the good news is, because Bitcoin is considered by many, if not everyone, as property, it's a good way to invest in property, because you can buy Bitcoin with $1, right? You can buy it with $100. You can buy it with $5,000. So if you can't afford a house to really hedge your bet against inflation, buying Bitcoin is a way that many people are doing that, especially as we see some of these inflation numbers continue to stay hot, despite the narrative out of the White House. So That's where we are. Chris, any questions?
Yeah, if I could jump in. So I heard a popular financial talk show host say something akin to never buy something you don't understand.
Right.
And I think that's really good wisdom, which is why I think anyone listening right now, do yourself the favor. Don't be frustrated you missed out on prior cycles. Don't wait till it's at all-time highs again and kick yourself and throw a bunch of money at it. Start reading now, start learning now, try to understand what the value proposition of Bitcoin, and I'm not talking crypto as a whole, but specifically Bitcoin is. I think, like you said, looking at the cycled bottoms is a really good way to understand what the value is holding to, and as you look at what institutions have been acquiring and hoarding Bitcoin, because it's not just individual people, governments around the world have been hoarding Bitcoin. So whether it's through asset seizures or outright purchases, so there's something to Bitcoin outside of just last one in, last one out's going to get the rug pulled on them. And so, yeah, do yourself the favor, start looking now, pay attention to what's happening. And I think you were talking earlier about like what would happen if you dollar cost averaged into Bitcoin since we started talking about it on the podcast a couple years ago.
Yeah. So I wanted to pull up this other chart, and this is just a tool you can go to, again, intothecryptoverse.com. It's a website that I like to visit to look at some different just charts to see how the Bitcoin price is really moving compared to some different averages and things like that. Benjamin Cowan has a great YouTube channel that you can check out as well. We'll link that in the description below. But he has on their website a Bitcoin DC simulation. You can, this is a free tool that they have. Of course, they have paid for tools, and we're getting no commission off it if you join. I don't pay for it. I just watch his videos and some look at this tool. So this tool that we're looking at is on March 9th, 2022, we had our very first episode of Refining Rhetoric. And we started talking about Bitcoin. And so that was on March 9th. And so what this tool does is allow you to put in, hey, I want to spend, if I dollar cost average, which means so in this simulation that we put in, if I put in $50 a month, starting on March 9th, on the 9th of every month, between then and now, what would my returns look like? And so if you're looking at the chart, you can see for the first really year and 3 or 4 months, you were down 30% at some point. And then on April 23rd, 2023, you got into the green. So you went from being down 30% in January of 23 to being up nearly 30% in April of 2023. And from that point forward, you have not been in the red. You have been in the black or in the green. And so you would have invested $50 a month. You'd have been buying now for 24 months. So you'd have $1,200 invested. And your portfolio's value would be worth $2,171. So you would be up 81% in your investment if you had just been putting in $50. And so I'd use $50 because, I know that not everyone can afford that, but most of us can afford, if we put something on autopilot and build it into our budget, a $50 investment. Obviously, if you could afford more and you were doing, $500, well, then you'd have had $12,000 invested, but your portfolio would be worth $21,710. And so the dollar cost averaging allows you to, because you're putting in the same amount of money each month, that if Bitcoin goes really high, well, you're buying a smaller percent. But if Bitcoin drops down, well, you're getting a bigger percent. So the value of your Bitcoin, at this one, you'd have 0.0459 Bitcoin total. You would have bought it at an average price of $26,000. And the current price as of this simulation was $60,000. So you can imagine most people are predicting Bitcoin will hit somewhere between $110,000 and $150,000 this cycle. Some people are getting more bullish than that, especially as we see some of these ETF inflows. And I'd like to explain a little bit about that later. But if you can imagine, if today you stopped buying Bitcoin, but you had faithfully done it for 2 years, and the price doubles from 60,000 to say 120,000, well, your $2,100 is now worth $4,200 versus the $1,200 you put in, and that's over a 300% return, which is Nancy Pelosi level returns for just us commoners. So that's kind of how dollar cost averaging works. But Chris, did I explain?
Yeah. I'd say
Any questions about that?
No, that's a great explanation, and it feeds back into, I think, what is a common psychological error people have when they think about acquisition of equities or assets. You don't time the market. It's smarter than you are. You're not going to win. If you had been waiting for Bitcoin to drop back below, let's say, to 10K where it was before, it didn't. It wasn't going to. And so you could have sat on a lot of money waiting, trying to hit the bottom of the market, when instead you could have been slowly accruing it over time. Dollar cost averaging is, I think, an excellent financial lesson for a lot of people to learn.
Now, Chris, do you mind scrolling up to the top again and just changing that starting date to October of 2020? And so I pick in October of 2020. So you would have actually been buying Bitcoin at some of the highest levels that it would have ever received, before now. So you would have been buying Bitcoin at 60,000, at $69,000 in the past. If you had been putting $50 a month in, starting kind of when it got really high last cycle, like when you probably would have been wanting to invest a bunch of money into Bitcoin because it was about to top out. So if you had been putting $50 in starting in October of 2020 until today, you would have invested $2,050. You would have seen Bitcoin drop from $69,000 to $16,000. And you would have had all your friends making fun of you. Like, I told you this was a joke. This isn't real. You've lost all of this money. You were buying it at $69,000. Now it's down to $16,000. Well, guess what? Today at $60,000, it's not even reached the all-time high yet. You would have invested $2,050 buying for the last 41 months. You would own 0.0717 Bitcoin at an average price of actually $28,000. And your current portfolio would be worth $3,391, or you'd be up about 65.4%. And again, we're at the beginning of a 4-year cycle, or we're at the beginning of the bull run of the 4-year cycle. And you can see, even if you started investing now and just faithfully invested $50 a month, that even though you'd be buying it potentially higher, starting higher than you would have ideally liked to, that if we continue to see these 4-year cycles, 4 years from now, buying when Bitcoin, goes up to $100,000 or $200,000, and watching it go back down and not selling when it drops back down to $40,000 or $50,000, whatever the next low is, that we've seen these lows continue to rise, that in your 2028 self or 2029 self is going to be very happy that you stuck with it. All right. So do you have any other questions, or does that make sense to you?
It makes sense. I kind of wanted to go back to 2016 because that was when I think the first ever hysteria of Bitcoin happened. Everybody was talking about it. It was in the news and everybody was making fun of people for liking it. But if you'd been buying in since then, you'd be up 700%.
Yeah. If you were, I did buy in 2016 and also sold in 2016, and probably for a loss because I just, got into the hysteria and just didn't think it was real. Right.
Which is why it's very important to understand the assets you're acquiring and knowing their value proposition.
Right. And so saying you started in October of 16, invested $50 a month, you'd have $4,500 roughly invested over the last 89 months. And your current value would be $38,867. Obviously, if we see Bitcoin double from here, you would see a kind of a high of around $76,000 to $80,000 this cycle from a $4,450 investment. So that's kind of the power of dollar cost averaging over time. And like you said, I know 4 years ago when Bitcoin was really rising quickly, I was spending an hour or 2 hours a day trying to learn it and understand it. There's a lot more information out there of course, you can go back and read the white paper. You can go listen to Michael Saylor. He's a great one to go, like, just kind of understand the basics principles, because he runs MicroStrategies. MicroStrategies was an IT company making about $50 million a year in profit, but had kind of hit a ceiling, and they were just kind of doing that year in and year out. He basically sold a bunch of stocks and bonds, raised $100 million, started buying Bitcoin. And today, his profit in his Bitcoin that he's bought is $5.5 billion. So he turned a $50 million profit company into one of the, I think it's going to be one of the, this cycle is going to have somewhere around a $10 to $11 billion profit over the last 4 years, because he's just steadily bought Bitcoin, um, and continued to leverage his assets to do that. And so it's kind of incredible. So why have we been talking about Bitcoin on this show for 2 years? We've been trying to educate you so that maybe you would have jumped on board sometime over the last 2 years and said, I'm going to give this a try. Again,
and can I jump in and
yeah,
because this is actually you're getting into what I feel is kind of the icky part of crypto and Bitcoin and the way people talk about it, because so many people out there are very charismatic about it, and they're kind of shilling it to their friends and like, oh,
sure.
you need to get in, you need to get in, and it all feels like a pump and dump. But if you understand the technology and you're not getting into it because of the hysteria or the craze, but you're trying to own an asset because you think that long term it holds value, like I don't have any intention of selling my Bitcoin anytime soon. I kind of hope to just squirrel it away and hold on to it as long
Mhm.
as I possibly can, because I think it will have and hold intrinsic value in the long run. And what happens in the short run, I actually think that I would be doing myself a disservice of selling it, because it is a limited commodity. And if you're thinking about currencies, it's kind of one of a kind.
Yeah, absolutely. I mean, if you think about, like, the last few years, the United States has printed trillions of dollars that we don't have. Bitcoin, obviously, if you look at like some of these other currencies in the United States, besides the U.S. currency, has already hit all-time highs because they've debased their currency so much. So for many of us, why it's called digital gold is because it's kind of like an inflation hedge. But look, you can go get more gold, right? They've got shows on the History Channel about how people are mining gold. You can go mine more silver, right? There's kind of unlimited amounts. It's just, can I get it out of the ground for less than I can sell it for with a good profit? With Bitcoin, we know that there's only going to be 21 million ever. So, a lot of people are saying, I'll never sell my Bitcoin, because it's a way of uh, really protecting any wealth that you have versus allowing governments and central banks to inflate your life's work away, by printing money and giving it to their friends. And so, and since many of us, you can't really, it's hard to buy land. And if you do buy land, well, you still have to pay property taxes on it every single year. And you've got to maintain it. And maybe you have HOA fees or this or that. Land is a way of protecting it, but the price of land is going up a lot, and it has continual expenses. Once you buy Bitcoin, there's basically, no future expenses tied to it currently. So maybe they try to give it property tax in the future. Who knows? But it's a way of really protecting your wealth. And so, whenever I tell people, it's like, look, Bitcoin's going to go up and it's going to go down. I don't know. It could go to zero. I don't see anything that makes me think it's going to go to zero, but do not put any money into Bitcoin that you think you need to pull out. Like, don't say, okay, I'm going to put this in for 3 months and then I'm going to pull it out, because 3 months from now, it could be down 30%, could be up 30%. It's very volatile in the short run, but if you look at it over a long period of time, the chart's up and to the right, uh, over a 12-year period. And so it's the best performing asset of all time, and it's accessible to everyone in the world, right? If you look at stocks like a Google stock, you have to get it on a stock exchange. Like, you can't buy it necessarily very easily if you're in Africa or China or any of these other countries. Versus Bitcoin is, you know, can be bought by anyone with a cell phone, basically anywhere in the world, and so it has a lot of power. And like you mentioned earlier, we're talking about Bitcoin here, or not. This does not translate to the other cryptos necessarily. Okay, so it's important to know that what the Bitcoin doesn't necessarily mean what Ethereum's going to do, or Cosmos, or ADA, or Solana, or any of these other cryptos. Their mathematical codes are different. What they're trying to do is different. But this is a technology. This is like investing in the internet, into Amazon, into any of these early startups. There'll be winners and there'll be losers. And Bitcoin seems to be the only one that is continuing to go up and to the right on a regular mathematical basis. Obviously, Ethereum's has performed very well, and there's starting to be some other ones that seem to be pulling away from the pack, but those are not necessarily property. A lot of those are going to be, pretty much like stocks. So I can tell you hey, go buy a farm, because that's a piece of property, and no one's thinking that you're necessarily shilling them anything. Versus, hey, I think you'll enjoy it by owning Bitcoin. Again, that's property. 99% of the people will say you can probably say that. You're not, committing any financial advice at that point, but saying, hey, you should buy Ethereum, you should buy some of these others, that would be considered giving financial advice, because those aren't properties. Those are classified differently by our governments. And so those ones do not have these intrinsic 21 million coins that are never going to be produced again. They all have their different, what they call tokenomics. And so that's when you can really get into this rabbit hole. But otherwise, most of us are really just trying to really understand Bitcoin first. You're not going to have the potentially, it's not going to be like Dogecoin and go up 2,000% in one day, or down 2,000% in one day. But we will see this kind of steady rise up and to the right. So I would just say that's why we've been talking about Bitcoin. We've been talking about it for 2 years. You may not have got it. You may still not get it. But hopefully today you'll understand more why we were talking about it. In what we would call the crypto winter, when everyone was making fun of all the Bitcoiners, saying, look at how much money you lost. Why would anyone invest in that? It's because we understand dollar cost averaging. We understand the 4-year cycles that are related to the halving. We have never been this close to the all-time high. Typically, we would expect Bitcoin to be around $32,000 right now, not around $61,000. So what's going to happen after it hits an all-time high of 69,000? Well, then we're going to have price discovery, and who knows what will happen there. But what do you know about the ETF? Do you know anything about the ETF?
No, I know nothing about the Bitcoin ETF, except you're not owning Bitcoin.
Yeah. Well, so the institutions, so the ETF, exchange traded fund, currently is 1-to-1. So if you buy, you can buy, I think, $50 worth, say, of the Bitcoin ETF. Then whoever you bought it from, whether it's like BlackRock or Fidelity or any of these other ones, is going to go buy $50 of Bitcoin, and it's going to basically attribute it to your account. So it's not your Bitcoin necessarily, but you own basically the rights to it, like an ETF owns the rights to a stock. So the ETF was approved just about 6 weeks ago. It was about Bitcoin was $38,000 before the ETF was approved, shot up to about 48,000 the days after it, dropped back down to about 40,000, and since then has, risen to where we are today at 61,000, again, as Wednesday, February 28th, about 12:15 p.m. So that's how we got to where we are with the ETF. And the ETF, because this is it's accessible, it makes it much more easier. You don't have to set up a wallet. You don't have to set up a Coinbase account. You don't have to connect to your bank. If you are already, buying stocks through these brokers, you can go ahead and buy these ETFs. And so it's created a significant amount of money and available to purchase the Bitcoin. And so right now, approximately 900 Bitcoin are being created per day. Right after the halving, 450 will be created per day. Well, right now, the BlackRocks of the world and these other ETFs are buying 9,000, 10,000 Bitcoin per day. So we're seeing 10,000 per day being purchased, only 900 new ones being created. And so that's really creating a supply squeeze, which is why we're seeing it increase exponentially overnight. I mean, right now you go to bed, it's at one price. You wake up tomorrow, it's $2,000 up. Now, I remember 4 years ago, tomorrow you could wake up and it's $3,000 down. Very volatile in the short term. That's why dollar cost average. That's why educate yourself on Bitcoin, the technology behind it. And you can do that, of course, by listening to our podcast, Refining Rhetoric, getting a little taste of it, and just doing your own research, reading the white paper, and really diving in, because I don't think Bitcoin's not going away. It's not gone away for 12 years. It's the best performing asset pretty much ever. It's the best performing ETF of all time, 6 weeks into it. And so there's only 21 million of them. Who knows what the value is going to be in the future? But if every single millionaire in the world wants to buy one, they can't. There's not enough of them to go around. All right. So until next time, continue to educate yourself about financial literacy, about Bitcoin, about crypto, because you want to preserve your wealth. You want to preserve the efforts that you're putting forth. Don't let the central banks and the governments inflate it away through monetary policy and steal the past work that you've done. Instead, invest in something that has been going up. Of course, past results don't really indicate future results. And as always, not financial advice. This is just what we're doing. This is what I'm doing, trying to protect the work that we've done and really have a more moral money. So until next time, share this episode with a friend and educate yourself about Bitcoin. See you next week. Thanks for practicing the 15 tools of learning with me on Refining Rhetoric. But if you want to dive even deeper, get practical advice on how to assess your students' learning more effectively, and get hands-on guidance, we have a service called the Classical Learning Cohort. A CC mom who just went through it named Bethany just said it helped her become a better communicator, listener, assessor, and teacher in her home with her girls. And by signing up for this cohort, the same thing can happen with you. It meets online 6 times per semester in a small group with like-minded parents and a leader that's going to help you understand the classical model and gain confidence as that lead learner in your homeschool and in your local classical conversations community. They are guided by veteran homeschool parents, and in that cohort, you will learn and practice new skills such as giving and receiving assessment. You'll learn how to draw your student out into each lesson by applying exordium and developing new tools for reviewing. And finally, you'll learn to mentor and be a mentor with other homeschoolers from around the world. So whether you're CC parent, director, tutor, or other CC leader, and you're looking to grow in your classical education journey, join us at classicalconversations.com/cohort. That's the Classical Learning Cohort. You can sign up today at classicalconversations.com/cohort. And you can see that link in the show notes below. Now let's jump back in.
Welcome to Classical Crypto with Will today. This is crazy. It's so fun to have this ETF news out. I want to talk to you about the halving and some crazy price predictions. For example, a lot of people are thinking that Bitcoin could return to its all-time high before the halving, which is ridiculous. Now, usually we're very, very cautious when it comes to crypto and listening to the wrong voice. Usually the loudest voice is usually the wrong voice. So I'm very cautious about getting overly aggressive or giving into that hype. But there are some leading indicators that make these hopes or aspirations or these statements quite interesting. First, in the first 3 weeks of trading, these ETFs, $5.5 billion have been exchanged and accumulated by the big boys. Now, this is insane. That means there's just such a high, there's so much demand for the product that these companies, 401ks, everyone is buying it up. So you can kind of see if they're buying it up and institutions are getting their first shot at it, wow, a supply crunch could be coming. We're at $52,000 right now. 69 would be an all-time high, so we're not that far away. Also, an article out today by CoinDesk was pointing to the fact that once the RSI, and there's a lot of crazy terms thrown around, but that's the relative strength indicator. There's certain points on a line that once Bitcoin crosses this point, it shows strength or weakness. In the RSI, the relative strength indicator right now is showing a lot of strength in Bitcoin. And when this has happened, cyclically, it's rallied by another 36%. 36% from here would push us to above an all-time high before April 19th. And that is where the Bitcoin halving comes in, where we go from a reward of 6.25 Bitcoin to 3.17, something close to that. So really crazy, very, very interesting to see these different things in the Fibonacci, the Elliott 5 wave, different things that the traders are looking at. And you combine that with the supply crunch of Wall Street, BlackRock, Vanguard, Fidelity, buying all their clients, buying up Bitcoin so fast, could be a very, very interesting cycle. It's going to be interesting to see how high Bitcoin can actually go. So if you are involved, not financial advice, it's going to be interesting. Do your research, be careful out there, and sell when it's going up, not financial advice.
Thank you for listening to Refining Rhetoric with Robert Bortins. Want more? Make sure to subscribe so you won't miss an episode. You can also follow us on social media to continue the conversation, and visit classicalconversations.com/rhetoric to find out how you can join a local homeschool community.